Over the last few weeks, social media has been flooded with World Cup videos. People trying Waffle House for the first time, tourists discovering Buc-ee's. We've all seen it, and most people are seeing it as entertainment. But economists see economic activity, and that's what we're looking at today. I'm Christiana Lovelace. I'm a licensed financial advisor, an accredited asset management specialist, and the owner of Diamond Point Financial. Each week on Pointe Perspective, we help you make sense of the markets, the economy, and your financial life from a professional perspective, so you can make financial decisions with more clarity and confidence. This week, we'll take a mid-year look at the market and discuss the themes that investors will be watching during the second half of 2026. Then we'll examine the economics of the FIFA World Cup and explore what one of the largest sporting events in the world can teach us about economic activity, consumer behavior, and the movement of money. And finally, we'll wrap up our estate planning series by discussing wills, trusts, and life estate deeds, while addressing some of the common misconceptions surrounding each of them. Whether we're talking about sports, markets, or your financial future, understanding what's happening behind the scenes often changes the way that you see the whole picture. As we move into the second half of 2026, it's a great opportunity to step back and look at the broader market environment. No one can predict exactly what will happen over the next 6 months, but it's important to understand the topics that investors will be watching. This can help provide context for the headlines that you're likely to see moving forward. One of the biggest surprises this year has been the resilience of the market. Despite ongoing geopolitical tensions, elevated interest rates, inflation concerns, and constant predictions of recession, many areas of the market have continued moving higher, and one of the primary reasons has been earnings. We've discussed earnings over the last several weeks, and it remains the foundation of stock prices. A company can have great PR or a popular product, but eventually investors want to know one thing: is this business making money? And for the most part, corporate earnings have remained stronger than many analysts expected coming into the year. That doesn't mean every company has performed well, but broadly speaking, corporate America has continued to demonstrate a level of resilience that many investors underestimated. The second major theme continues to be artificial intelligence. While we've spent time discussing whether portions of the AI trade have become speculative, the opportunity extends far beyond a handful of technology companies. Artificial intelligence is driving demand for semiconductors, data centers, cloud infrastructure, energy consumption, cybersecurity, and software development. AI is no longer just a single investment theme, it's really becoming an economic theme. Not every company connected to AI will succeed, but the technology is continuing to influence capital spending and business decisions throughout the economy. And the third theme investors are watching is volatility. As we move through the second half of 2026, investors will continue monitoring inflation, monetary policy, geopolitical developments, energy prices, and the upcoming midterm elections. Any one of those issues has the potential to create periods of short-term uncertainty. Historically, election years often create additional volatility as investors evaluate potential policy changes and the uncertainty that comes with them. But it's important to remember that uncertainty and volatility are not the same thing as long-term risk. Sometimes investors interpret volatility as a sign that something is broken, but historically, that's usually not the case. Volatility is a normal part of investing. In fact, most years include multiple market pullbacks, even when the market ultimately finishes higher. Volatility never feels normal in the moment, and that's when investors can become distracted. Every year brings a new collection of headlines, predictions, and reasons to abandon a long-term plan. We've already seen it with inflation, interest rates, and geopolitical conflicts. But successful investing is about maintaining discipline while evaluating how headlines fit into the bigger picture. As we enter the second half of the year, the most important question isn't whether markets will experience volatility, because they probably will. The more important question is whether the underlying drivers of economic activity remain intact. Are businesses still growing? Are consumers still spending? Are companies still generating earnings? And are long-term trends continuing to develop? As of right now, many of those answers remain more positive than a lot of investors expected at the beginning of the year. Successful investing often comes back to staying focused on the fundamentals, which is exactly what we'll continue doing. Right now, North America is hosting the largest FIFA World Cup in history. And while most people see a sporting event, economists see it as one of the largest economic events in the world. This year's tournament is the first World Cup ever hosted by 3 countries at the same time: the United States, Canada, and Mexico. It's also the first World Cup to feature 48 teams instead of 32, and it will include 104 matches, up from the typical 64. More than 6 million fans are expected to attend in person, making it the largest tournament FIFA has ever organized. The United States alone is hosting 78 matches across 11 different cities, and the final is expected to draw one of the largest global television audiences of any event on the planet. All of this creates a tremendous amount of economic activity. Think about everything that happens when millions of people travel. They buy airline tickets, they reserve hotel rooms, they eat at local restaurants, use ride shares and rental cars, buy merchandise, visit attractions, and every one of these purchases puts money into local businesses and local economies. Economists estimate that the tournament could generate tens of billions of dollars in economic activity across North America through tourism, hospitality, transportation, entertainment, and retail spending. Hotel bookings and short-term rental demand have surged dramatically as visitors come in from around the world. This is one of the reasons economists enjoy studying events like the World Cup, because it provides a real-world example of how money moves through an economy. One person's spending becomes another person's income. The hotel pays employees, the restaurant buys supplies, the transportation company hires drivers. Economists call this the multiplier effect, where an initial injection of spending creates an additional economic activity as those dollars continue moving through the system. But where things get interesting, economic activity and economic value are not always the same thing. The World Cup will almost certainly create a temporary surge in spending for many businesses, but economists still debate whether major sporting events create lasting economic benefits or if it simply shifts spending from one place to another for a short period of time. What I find most interesting is what events like this teach us about human behavior. People don't spend money because a spreadsheet tells them they can. They spend money on experiences, on travel, entertainment, and on memories. We saw this with Taylor Swift's Eras Tour, we're seeing it with the World Cup, and most recently we saw it with the Knicks NBA Championship. Whether it's sports, music, or travel, economics ultimately comes back to people making decisions. And that's one of the reasons I enjoy discussing topics like this. Economics isn't just reports, meetings, and data. Well, it can be, but it's also about understanding how people behave, what they value, and how those decisions influence businesses, communities, and entire economies. As we wrap up our month-long discussion on estate planning, we're focusing on 3 tools that people hear about all the time: wills, trusts, and life estate deeds. Unfortunately, social media has created a lot of confusion around these topics. I regularly see videos claiming that everyone needs a trust, that wills are useless, or that one particular strategy solves every estate planning problem. But that's not reality. The best solution depends on your goals, your assets, your family situation, and the laws in your state. So let's start with the most common document, a will. A will provides instructions regarding how certain assets should be distributed after your death. It can identify guardians for minor children, name an executor, and provide guidance for handling your estate. One thing that surprises people is that not every asset passes through a will. Retirement accounts, life insurance policies, and many investment accounts often pass through beneficiary designations instead. That's one of the reasons we've spent so much time discussing beneficiary reviews over the last few weeks. With a will, assets that pass through the estate generally go through probate, which can be a longer process and typically requires court oversight. But for many families, a will serves as the foundation of an estate plan. Next, let's talk about trusts. A trust is a legal entity designed to hold and manage assets according to the instructions you've established. Depending on the type of trust and your objectives, a trust may help provide privacy, avoid probate, create additional control over distributions, or assist with more complex family situations. The 2 primary categories of trusts are revocable trusts, which can be changed during your lifetime, and irrevocable trusts, which cannot be easily altered once created. Most specialized trusts created for family, charitable, business, or tax planning purposes are variations of these 2 foundational categories. Trusts have their unique benefits, but remember that a trust is not automatically better than a will. They can be extremely valuable in the right circumstances, but they can also create additional cost, complexity, and maintenance requirements that may not be necessary for every family. That's why the decision should be based on your situation rather than a generic recommendation from the internet. The last document we'll discuss tends to receive less attention, but it can be incredibly effective, and that is a life estate deed, sometimes called a ladybird deed in certain states. This strategy is most commonly used with real estate. It allows you to maintain control of the property during your lifetime while establishing who will receive the property after your death. In some situations, this can help simplify the transfer process and avoid probate without requiring a trust. Some people also use this deed strategy or a trust as part of long-term care or Medicaid planning. And while that can certainly be a consideration, most of my clients are primarily focused on maintaining control, creating efficiency, and making things easier for their families. That's why I generally encourage people to focus first on the planning objective rather than the planning tool itself. What are you trying to accomplish? Do you want additional privacy? Do you want more control over how assets are distributed? Do you have a blended family or own a business? Those answers often determine which tools make the most sense. At Diamond Point Financial, we've made estate planning a much larger part of our planning process because we saw how often clients needed guidance in this area. We help clients organize information, evaluate options, and access estate planning resources that coordinate with the rest of their financial plan. In our experience, estate planning has never been about the documents themselves. It's about creating clarity, reducing uncertainty, and providing your family with a clear path forward when they need it most. Before we wrap up, I want to take a moment to thank everyone who joined us this week as we celebrated 5 years at Diamond Point Financial. Seeing everyone together was incredibly meaningful, and I know we have clients across the country, and I hate that there isn't a better way for us to get together, but you will be receiving your anniversary gift soon. What started as a small idea has grown into something far larger than I ever imagined, and none of it would have been possible without the trust you've placed in us over the years. Thank you again for allowing us to be part of your financial journey. We truly appreciate your support and look forward to serving our clients for many years to come. Today we discussed the mid-year market outlook, explored the economics of the FIFA World Cup, and wrapped up our estate planning series with wills, trusts, and life estate deeds. Next week, we'll be taking a short break for the 4th of July, and we'll be publishing only our weekly newsletter summary. So if you haven't already, be sure to subscribe to Pointe Perspective using the link below. We'll return on July 9th with a new discussion surrounding credit scores, how to build it and use it responsibly, and we'll have a special week focused on children and how to set them up for success. If you found this episode helpful, be sure to subscribe to our channel for future updates and discussions every week. I hope this offered some useful perspective, so until next week, take care.